It was an inside trading range today on the S&P 500, generally trending lower for most of the day. S&P down 0.39%, closing at 5940.46. We still are seeing large volume coming in the options market at the 6,000 strike. The 6,000 strike is still the largest gamma exposure concentration as well. So it appears we're in a little bit of a consolidation phase while market participants continue gearing up for this next potential leg higher. Switching over to our daily candlestick chart, if we zoom out and look further up the options chain, we see gamma exposure growing at these higher strikes highlighted by our purple bars here. This is absolute net gamma exposure. And we see GEX growing at the 6,100 strike as well as 62 to 6,400. Volume has also begun to pick up in some of these higher strikes as well on a daily basis. And so we're watching these levels closely because this could be the next targets if we break through this 6,000 to 6,100 range. In terms of our own portfolios, we are continuing to buy dips every single trading session. However, we are protecting ourselves on the downside by rolling our hedges and maintaining this downside exposure with SPY put debit spreads. And so this basically gives us an opportunity if the market does see a 3 to 5% rejection, we can potentially have a decent opportunity at earning some profits, offsetting some losses, and using those excess funds to then buy the dip. And so even though we think prices are headed higher, that doesn't mean we won't see dips along the way. And in fact, the data is telling us that we are in a buy the dip environment. Our gamma exposure intensity gauge is positive, and our GEX weighted volatility gauge is around the midpoint, just below 50%. So as volatility has been coming down over the last several weeks and gamma exposure has been increasing to the positive side, this has basically put us in a buy the dip environment over the last 3 weeks or so, and that's what we've been doing in our own portfolios. By the way, if you're interested in following along as we manage and trade our options portfolios, you can head on over to our website, geeksoffinance.com, sign up and become a member, and you'll get access to our portfolios, to our community Discord, and to our gamma exposure dashboard.
Thanks, Anthony. Let's take a look at QQQ, which often moves in similar fashion to SPX, given that there's a lot of overlap with their major top holdings, as you know. But one thing I wanted to point out is that QQQ has seen 4 of the last 5 sessions with positive GEX declining. It's still positive, but it's really dropped a lot from the May 13, 781.5 million peak. And this decrease in positive GEX coincides with price being right at the upper Keltner channel, which is this purple line that you can barely see here, and also just below the whole moving average. Now, it's interesting to me that the whole has caught up with this upper dealer cluster zone we've been highlighting for at least a week and a half now at 525. I tend to view price being below the whole as a bearish signal, but that doesn't mean that we can't see QQQ, make it up into this upper dealer cluster zone. And in the process, given that that's also where the whole is, it would also mean a retest of the whole moving average from below. We have seen GEX grow at higher strikes, and so the overall pattern still looks bullish.
Thanks, Sean. With volatility declining, we've seen a number of risk-on type of names really rocketing higher over the last several weeks. Palantir is no exception, going from below 70 all the way up to the 130 level. We've had a little bit of a pullback over the past few trading sessions. Palantir was down 0.59% today, closing at 125.59. We saw a little bit of a rejection above this 130 strike. In one of our videos last week, we mentioned our upper dealer cluster zone and the likelihood that we could see some dealer selling pressure above the 130 level. That has taken place over the last several trading sessions. But what's interesting is that when we scroll up the gamma exposure data graph here, we see gamma exposure is actually growing at higher strikes all the way up to the 160 strike. So this is basically showing that market participants are viewing this pullback as a buy the dip opportunity for yet higher prices. We did break out to all-time highs in the middle of last week, and we continue to see volume coming in at higher strikes in the options market. So that's something we really have our eye on. This is a name that we're looking to add to our portfolio. I'm eyeing the 130 140 call debit spread, and I'll be looking most likely in the June 20th expiration. These out of the money call debit spreads are really great opportunities, especially when you are in a big uptrend and you've got positive gamma exposure. They don't always work out, but the risk reward asymmetry makes it a worthwhile play when you've got large positive gamma exposure like how we've got set up here on Palantir. Meanwhile, a pullback into the trend. That's the type of setup we look for in general terms, and then we construct an entire portfolio with premium collection strategies, bullish momentum strategies, and hedges that are all working together. So this is just one small example of something we'll be looking at adding to our portfolio this week. If you guys are interested in following along, I'll put a link in the description below. You can check out becoming a member whenever you get a chance.
With VIX expiration tomorrow morning pre-market, I did want to make sure we took a quick look at that before we jump into other things. You can see the VIX printed a doji candle today. We are above the whole moving average, and we are just above this lower dealer cluster zone at 17. We've come close to 17 in the last few days already, so it's yet to be seen if the VIX will drop further or if it's due for a larger bounce. I did notice that with the change in GEX, we do see our zero gamma level having moved up to 22. It had been at 19, but overall, we've said for days now, the VIX appears to be in a range of between 17 and 19 until we got through VIX expiration tomorrow morning. So VIX expiration will be pre-market. We'll see what happens after the open, and basically it looks like there's more risk on the VIX to the upside right now, just based on this area, between 15 and 18 finding support, really going back months and months now. So definitely something to keep an eye on if you're a short-term market bull.
Thanks, Sean. Next, let's take a look at Tesla. Tesla is actually up on the day, up 0.51%. Close it at 343.82. We've been highlighting the large gamma exposure between 350 and the 400 level. Tesla breached its 50-day EMA to the upside earlier in April and took off here the first couple of weeks of May. We're seeing continued large volume in the options market, both at the 350 strike and at the 400 strike. And so this appears to be the target of market participants. This 350 strike is our upper dealer cluster zone, and this is also a previous resistance level. So we got to get through this 350 to 360 level first. So we could see some consolidation or maybe even a pullback. But I think longer term, for a move into the summer up into the 400 strike is our ultimate target. And so this could come sooner than we expect. It all depends on how much volume is coming in the options market. And so far, it has been pretty substantial.
Thanks, Anthony. Let's look at GoDaddy, GDDY. This has a very singular focus on the 200 strike, which is interesting. We don't always see situations that have this much GEX at one price relative to the other strikes. And it's not a guarantee that it works out, but this is a setup that we would typically look at as having high odds of being fulfilled. And this upper dealer cluster zone at 200 does coincide with the upper Keltner channel. Of course, the Keltners are one indicator that I like to use. And right now, price has just been consolidating sideways for a few days, basically right at the whole moving average, which is at 189.34. The channel looks bullish, and there's really no negative GEX to speak of. If we take a quick look at the 3D map, you can see that a lot of that GEX is at June 20. That gives us about a month from now where we would expect this to come to fruition, barring any major shifts in this GEX picture that we see.
And guys, we are running a special promotion, $300 off our yearly portfolio manager tier subscription. Use code May2025 at checkout. We have a few spots left, but we are ending this promotion soon, so take advantage of it while you can. Our members get full access to our gamma exposure dashboard, our algorithmic trading strategies, as well as our vibrant community Discord. Our Discord community has a ton of great traders in there sharing their own trade setups and strategies every single day. You also can follow along with our trades in real time as we manage our portfolio throughout the trading session. You definitely don't want to miss that. I'll put a link in the description below so you guys can check that out when you get a chance. Thanks so much, everybody, for watching, and we'll see you guys in the next video.